Thanks for joining us. I'm Marlon Bowling with you as we look at your ag commodity trade on a Wednesday, and we bring in Rich Nelson of Allendale Incorporated in McHenry, Illinois, to talk about what to expect in today's trade. Rich, we had a little firmer tone overnight. How come?
I think right now we're just seeing a general broad commodity-based buying across the board here today. In fact, the Thomson Reuters Commodity Index, one of the general measures of commodity prices we watch, which includes grains and energies and all these other products, this actually is at its highest price now since 2015. So another new high there. I would suggest this is not quite grain news today, but just general broad-based buying of some sort here.
Is it technical inspired, or what's driving this in? There isn't a whole lot to really trade on. The weather is just kind of bearish in some areas and bullish in others right now.
That's exactly right. And maybe you can possibly discuss this issue from you mentioned the chart standpoint. Keep in mind this crude oil market, for instance, now pushing to some higher ranges it hasn't seen here in quite some time. So you could also argue possibly this breakout on the crude oil side might be of interest to the traders here too.
And what's that about, and how does it tie into the ag side here?
And for us on the ag side here, we do have a good share of our usage of both corn as well as soybean oil is actually tied directly with energy prices. Not all of grain prices are determined by energies, but a portion is, and this is something which we do have to watch, which does occasionally give us little surprises like this possibly.
Now, we do get new ethanol production numbers today, right?
We certainly do, and this will be very closely watched. Year-to-date numbers, I believe, are about 2.2% over last year for production. USDA's goal is 2.6% over last year, so we're a little behind right now, but I don't think anyone's panicking. We still have some questions regarding ethanol efficiency right now, which could make a difference.
Let's take a look at our Globex trade, and we'll cover the prices as they are this morning. Let's take a look, first of all, at the corn market. And it looks like that July contract did gain a couple of pennies overnight. It had a last trade of $3.91 now, so that would have been roughly about 2.5, almost 3 cents off its low from last night. Meanwhile, December 2.25 higher this morning. And on the soybean trade, a little firmness there too. We have July 6.25 higher this morning. We're trading at 10.63.5. Well, it's only one tick from our high of the overnight trade. And we have November now up 5.5 at 10.50 3/4. By the way, Rich, how are we coming on the South American harvest activity? It's kind of getting lost in the shadows these days.
It sure has been. In fact, numbers in these past week or so, nothing too past the normal pace in terms of actual variations there. So in terms of these numbers, I think you're making a very valid point. This market has turned so solidly to U.S. fundamentals that possibly these numbers from South America may not have the same effect they would in previous years.
Is it a concern that we haven't heard much in the way of export sales overnight anymore?
Maybe that's also a good discussion point after we had these raging numbers for soybeans. And also Thursday's report will be a strong number, too, for export sales, but that's only because it's good through sales through last week's Thursday. So very valid point. We are cutting off a little bit on exports, and maybe the market needs to pay attention to that as well here.
Let's look at the wheat and see where the wheat traded last night. On Chicago wheat, first of all, we have the July new crop contract 5.5 higher at 487 as it's bouncing back. Kansas City wheat, where we've been talking about the wildfire activity in the southern plains, 7 3/4 higher at 507 1/4. And in the Minneapolis wheat, we have July overnight trading 2 3/4 higher at 624. Any expectations there today in the wheat complex?
I think today's run, it sounds good, and I think it will be very welcomed by producers. But as it stands right now, this forecast still shows above normal precip for the next really week and a half, if not up to 2 weeks. So I can't see this market holding extended gains here for right now, at least.
Interesting, where they've been talking rain for quite a while, so apparently they've talked about it long enough, and the market is rebounding once again overnight. All right, thanks, Rich. We'll come back in a moment, and we'll examine what to expect in our cattle and hog market activity when we come back in just a moment. Time to go back and talk more with Rich Nelson of Allendale Incorporated this morning, and I want to focus now on the livestock trade. And I'm looking at the rundown from our cash cattle trade yesterday, and it's like a big fat goose egg here, Rich. Nothing going on much this week. I only heard of maybe a few dozen head that have sold in the whole country here. What is the trade waiting on this week anyway?
And that's actually a great point here. So we're not going to see too much trade probably even tomorrow or tomorrow morning, unlike the past few weeks. So we got Friday's cattle on feed report, which should be pretty darn exciting. And in terms of the numbers on the placements, I think the trade's really going to get excited about this potential change in what's been 12 straight months of above last year placements. That certainly should change as of Friday's report, and actually for the next couple months in front of us here too as well.
Boy, I'm glad you brought that up. We actually have those numbers, pre-report estimates here on a survey done by the Wall Street Journal. And they surveyed analysts all across the country here to get their thoughts on what they expect for the on-feed number and the placements number and the marketing's number. And in that survey, they actually showed the average guess for on-feed at 107.4% of a year ago. In other words, a 7.4% increase. And the placements, as Rich mentioned, way under 100%. I haven't seen this for months and months and months and months and months and months. It's always been over 100%, and then the report always comes out higher than even the trade guess. Well, now this time it's under 90% at 89.8, and the marketing's at 96%. Where does Allendale fit in with these ranges of guesses here?
So we're actually just under the average guess there. We're at 87.8, so in other words, 12.2% under last year. So big issues right now. I think the trade or cattle feeders are a little concerned about this low price issue, especially with these break-evens these next 2 to 3 months. So negative news still with us for maybe moderate supplies up ahead, but this third quarter, based on these lower placements, should have some lighter numbers there.
How much impact is this winter weather and also the drought affecting the pastures and the wildfires and impacting the cattle in the southern plains? How much is this overall having an impact here on the cattle herd this year?
You know, it certainly has been an issue, and we have seen moderate cow liquidation in some areas. That has been a topic of discussion. And certainly for us on this cattle on feed discussion, you know, we do have this, the numbers which go straight to the sale barns from most cow-calf producers. On top of that, due to this weather, like you've mentioned, we now have to also add a small, more or less, overage of many producers just moving straight from pastures to feedlots. So certainly we've boosted these cattle on feed numbers because of it.
On the direct hog trade yesterday, the plant-delivered hogs, everything looks to be higher across the board. I'm checking across all regions here, and it looks like every location was over $1 higher yesterday. It didn't matter if you were talking live basis or carcass basis.
Exactly right. So I think on this one, very good news. We've got this cash hog market more or less getting back where it should be here. Cash pork, certainly with yesterday's discussion, we can probably have some more talks in the coming days about this market stabilizing and continuing gains. So we've certainly hammered things out and fixed things a little bit on the cash side. We're just waiting on futures to make this next leg up in terms of price movement.
All right. Well, thank you, Rich, for talking with us and helping us kick off trading day on a Wednesday. Wish you all the best out there. Rich Nelson happens to be with Allendale Incorporated. They are based in McHenry, Illinois, where I heard the other day, John, they had a little bit of snow and a little bit of rain, and they kind of had all the seasons all in one day.